first partner, which is Nottingham City Council. And we started about 5 or so years ago, and from then, the organisation's grown from strength to strength. And it also is able there to add value to mainstream services. Opportunities present themselves after Brexit. Now, that term Brexit just keeps on coming back over and over again. It's a reality that the impacts of Brexit are here and are starting to bite. But obviously, with Brexit comes opportunities to trade with other countries around the world, especially those Commonwealth countries. And obviously, with the onset of the Commonwealth Games starting very shortly, we're going to obviously see that there's going to be more opportunity to trade with those Commonwealth countries, which many of our communities are from. Also, seeing that there's an opportunity to network, connect, and grow our businesses, which is obviously a valuable thing. So where did it come from? Just a bit of our history there. So it came out of an organisation which is called the Community Partnership Forum. This was an organisation led by Councillor Melita Bryan. She was a sheriff back then. And basically, it came out of the 2011 riots, which took place around the UK after the sad death of Mark Duggan. And basically, because there was an impact in Nottingham, we realised that actually we need to do something about it. And obviously, Melita then called a number of organisations together, around about 60 of them, to start to address some of these issues. And one of the groups out there was a subgroup which was focused on entrepreneurship and employability. And I was heading up that group. And it was, we did a conference called BEAD, which is Black Youth Entrepreneurship and Employment Day. And over 100 odd people attended, and overwhelmingly, their suggestions and their recommendations were that we needed to have a Black Business Association working with the many various ethnic minority communities within the city. So in involvement with Audrey Winter and Mike Corrie-Bent, I set on a journey with them to help them to grow the idea. And it worked with us for about 18 or so months. And then I took the work then within, because obviously I'm also a councillor, but I brought it into the council to work. And one of the events which we hosted back in 2007 was our first event, was to host one of the monarchs from the Nigerian community called the Oni of Ife. And so basically, we hosted him in the UK, brought him to Nottingham, and we then started a dialogue to discuss how we can build better links and trade links with the Yoruba community in Nigeria. And these were some of the spectacular photographs we got on the day. Obviously, there's an element of cultural understanding which was missed by some of our council officers. They said it had to be a quiet event, not knowing that the Yoruba culture is very, very vibrant. So there's supposed to be only about 30 odd people there. There was over 100 people trying to cram into a room which only seated 30 people. But it was a great event. But it also just showed that actually, there is work. And then off the back of this, we developed a relationship with the Nigerian British Chamber of Commerce and the Nigerian British Shipping Association. So again, we had a roundtable discussion, just as stated there, and again, just discussing with some of the partners, not only obviously from Nigeria, but also some Nottingham-based businesses as well. So again, there's a number of events what we've been doing since 2017. Obviously, this is all pre-pandemic, so this is where people were used to coming out, etc. Evening events, breakfast events, in-work events. A lot of people were just attending. Then the last one there was 2018. We had a strategic board. Some of these members here are actually two things. We've got an advisory board, but also we've got directors as well. And these are some of the players who support that and support the growth of Be Global. And again, some of the events we've been done, and we've partnered with various organisations over the years. So there's obviously a lot more we can give. So it's all around startup advice, helping to grow your business, helping to scale your business. There are some programs that we've done and I'll come onto the next slide, which is this one, which is actually funded by the UK government. This again is the preparation for when all the European money is going to dry up basically, and the government did a pilot project called the Community Renewal Fund, and that project was led by the Chamber of Commerce, who developed a consortium, and B Global were one of those consortium partners who were there to help deliver that business support over the Nottingham area, but also we had a responsibility to go out into here, Bassett Law, Mansfield and Nottingham City District Council areas. That programme ended at the end of June, but for the other areas, Bassett Law, Nottingham City and Mansfield District Council areas, there's actually an extension to those businesses who can get some support. And we've got actually one of those businesses here today, and at some point we'll probably ask him to say a few words and promote his business. And again, it's there just to basically support what we're doing. Again, it's for anybody who wants to start up a business and get that expert advice, but also to help them scale. And presently on this present programme, through the Community Renewal Fund, there is actually business finance. So in a form of growth vouchers, which is up to £2,000, a business can actually get to fund their business, or up to £8,000, where the business would actually have to contribute 20% investment into their business as well. So there are actually practical ways where you can actually get finance through this particular CRF program, but it's only limited now, probably to the end of July. So I think that's generally it for myself. Apart from just one other program which we're actually doing. This program actually cuts across the D2N2 area, which is a Derbyshire, Nottinghamshire area, and it's called the Diverse Leadership Program. And that program there is basically run by the consortium of NTU with a number of other organisations, and it's to help organisations who want to grow, who've got people who are talented in their organisation, want them to go through some form of management training, leadership training. There's a free program we're actually hosting with them. The date hasn't been set yet, but it's probably going to be started in September. But we'll be able to, people, if they're interested, can sign up, and that's for all communities to get involved in. So that was it for me. I didn't want to take too much time, and apologies for the online viewers for starting late because we had some technical issues. But if anybody's got any questions, you can ask, and if not, then we can pass on to the next speaker, who's going to be Cameron from First Enterprise. Any questions? All stunned into silence.
Can I ask you one question?
Your one question, yeah, go ahead.
Is B Global just limited to Nottingham area, or is it UK nationwide?
Yeah, B Global at the moment in time is Nottinghamshire, so Nottingham and Nottinghamshire. And obviously, yes, the D2N2 area because of the programme what we're delivering at the moment. So we've got plans to expand, but at the moment in time, we'll have to work through other partners across the UK. Yeah, brilliant. Okay. Okay. Do you know where your presentation is? Yeah, it should be on the front there. Thank you.
Hello everyone. Thank you Leslie, and thank you to B Global for inviting me here today. It's a really amazing venue, and B Global do some excellent work. So excited to be here. Oh, sorry, is this on? So yeah, I'll try not to, my slides aren't as maybe interesting as Leslie's, they're a bit more monotonous, but I'll try and make it interesting. So a little bit of background about First Enterprise Loans. First Enterprise was set up over 30 years ago. Our board is made up entirely of BAME members. It was initially set up as a joint initiative between a consortium of BAME business leaders, the Home Office and Nottingham City Council, with the aim to promote economic activity within BAME communities. Because back then, you know, with the migration was a bit more fresh then, so you know, it still is a big issue, obviously. But that was our roots. We were set up as business support. Now we've moved over to business lending now. So that's what we do now. We loan to businesses at any stage of business, whether that's startup, pre-start, existing, recovering. All of our loans are government backed, and we are set up currently as a not-for-profit as well. We're not here to take on the banks. We're in fact here to complement the banks. Anyone that comes to us first, the first question we ask them is, have you gone to your local bank first? Have you gone to a high street bank first? Because they'll always give you the best rates. But where they can't help in those instances, that's where we are. That's where we want to be. Because the other option is, you know, you've got kind of predatory type lenders, you know, charging very high interest rates. So that's what we're about. We are a delivery partner for British Business Bank. We operate right in and around the East Midlands, and we also deliver for Big Society Capital. Just not going to the next slide. Oh. It's gone on there. It's just, oh, there.
Oh yeah, sorry.
Thank you. Sorry about that. So, just going to give you kind of a brief overview of the types of funding available. It's not limited to these, but these are the traditional type of funding that's available. So the first one, debt finance, is another way of saying loans. Your traditional loans. Oh, sorry. Your traditional loan. That's where you borrow an amount of money at an agreed interest rate over an agreed period of time, and we have it as monthly payments. And then you have equity finance. That's where you trade a portion of shares of capital of your business you trade a portion of your business for capital. And then you have grant funding as well, which is, you know, that's non-repayable, but they have, you know, sometimes strings attached, and a portion of that what you would be expected to contribute yourself as well. Now, people sometimes, you know, look at debt as bad. That's not necessarily the case all the time. Yes, if your business isn't ready for that or at that stage yet, or if it doesn't need it, or if you want to grow organically, and if you've got a lifestyle business and you just want to, you know, slowly grow organically, then absolutely that's fine. But debt really, in my experience, has been the thing that allows you to grow, take you to that next step. Or certainly with our funding, we've seen that, you know, some businesses that take a startup loan, which I'll get into a little bit later on. They take a small startup loan, prove their market worth, prove themselves as a good borrower, and they use our funds as a springboard to be able to get high street lending or move on to equity funding. So, you know, and we don't charge any early repayment fees. So we encourage you, in fact, to pay your loan off early. And so it's not always about is debt bad. It's what's right for you and your business. And sometimes it doesn't necessarily have to be a choice between these three. It can be, you know, a blend of these three as well. Whatever works best for your business. For example, grants. You know, the portion I mentioned where you have to put your own money for that. We can do that as a loan as well, because, you know, that can be a big amount of capital. Sometimes that's required. So, and we look at that as a less risky proposition, because the grant provider would have already done the due diligence, and obviously the risk is spread out. So I just want to talk a little bit about barriers to accessing finance. This is where, if anyone has their own experiences here, feel free to jump in and add to this. But from my experience, these are some of the ones that we've experienced. So first of all, obviously, if you've got credit history, that's generally quite a big barrier sometimes. You know, there are things you can do to prepare yourself and be investment ready, and I will talk about that a little bit on some later slides. But generally, you know, that's something that they don't really teach you in school, and you kind of have to learn it yourself. There are companies out there that, you know, are experts in that field, but that obviously is a big one. We ourselves, we don't look at the credit score, so when a proposition comes to us, we don't look at the score. There are a couple of things that we look out for, such as, have you got more than 4 defaults in the last 3 years? Are you with a debt management company with multiple debts? Do you have an IVA or a CCJ, anything like that? So, but generally speaking, you know, for us, late payments, we're quite lenient with that in that sense, you know. The business industry and sectors is perceived as too risky. So, for example, drop shippers right now, you know, online retail, everything's going online at the minute. Whereas drop shipping, just giving you an example of one sector which we perceive as slightly risky. Well, not risky, but the margins are very thin. So that's where you've not got your own stock. You're retailing for someone else, and you have an online shop, and you basically take, you know, 2 or 3% margin. But when you factor in you know, returns and stuff like that, then your margins are very thin. So that's one example. A couple of other sectors that we can't do is, and not because they're risky, but pawnbrokers and pornography, and that's just because it can make the government look bad. So we can't. But other than that, we don't discriminate, and we service all sectors. Lack of experience, you know, there's no real way around that other than talk to an expert, you know, and try and build that. Lack of security. Our funding is unsecured completely, so we don't take any charges or debentures on your properties. But that is obviously a barrier to finance generally in the larger scheme of things. A weak business plan, that's a major thing for us. You know, we do sometimes take a leap of faith, even if necessarily the business proposition isn't that strong. If you can demonstrate to us that, no, I've got a plan in place, this is how I'm going to achieve it. Yes, I'm going to a new type of market that you might not be aware of or familiar with, but here's my business plan, and this is how I'm going to do it. If you can demonstrate that to us, you can build that narrative. You know, more often than not, we'll back that, and that's what, you know, what we're about. Forecasting not properly considered. You know, we're talking about forecasting your cash flow forecast. The 2 questions we ask is it achievable? Is it is it achievable? And if is it realistic? Sorry, that's the one. So, you know, when you're forecasting, if you say a small cafe in, you know, out in a rural area, and you're forecasting, you know, 1,000 hotcakes a day, is that really realistic? You know, and let's say, for example, okay, it is. That's definitely achievable. Sorry, it's definitely realistic. Is it achievable? Do you have the capacity? Do you have can your oven take that? Can your staff take that? Do your operating hours allow that? So those 2 questions are very important to us. And when someone comes to us, the business plan is very important, but the forecasting tells us a story, and it tells us how much effort someone's put into their application and how much thought they've put into their figures. Because sometimes you can come up with an idea, but it's not until you put the figures pen to paper that you realise actually this maybe might not be a good idea, or actually this is a better idea than I even thought. So very important there. You know, we don't want to see a kind of a linear kind of forecast. We want to see some trends in there as well. And debt serviceability, the ability to repay. As I mentioned, we do unsecured lending. So we do ask for a personal survival budget, which is your personal income and expenditures at that given time. If that's not necessarily, I mean, for us anyway, and obviously other lenders that will be a dead end. For us, yes, if your surplus covers the monthly repayment, we see that as a big tick. It's less risky for us. If it doesn't, or if it's in deficit, that's not the end of the road here. You know, we can still look at it. We will still look at it. It just might mean that the business proposition needs to be, you know, solid. So and lastly, cultural stigma. You know, that's when we're talking about, especially I suppose the BAME ecosystem, cultural stigma. I know in say for example Asian culture, interest is seen as, you know, the devil's work sometimes. So and you know, in other cultures I know that it's just, you know, oh, we'll go to the bank and, you know, or taking a loan, can't you do it yourself? But realistically, in this day and age, you know, as I mentioned before, with debt, it's the means to grow. It's going to provide you the means to grow, and you know, you can sit there and save, but also, you know, you can propel your business and yourself with that. So, you know, I'm not necessarily an expert in that one, in that area, and you know, the report done by NatWest was, I think, really good and highlighted some really good points there. And I think Charlie will focus on that in his slides. Just some tips for applying here, best to get the best chance of approval. First of all, talk to us. Come and talk to us before you've applied. You know, we'll give you an honest. We'll sit down because we don't want to waste your time. If we see something initially that's not there, we'll tell you straight up. And you know, if it's a case of, okay, you can go back and do some work on this or change this, maybe your credit, you know, you got a default here, maybe settle that and then come back to us in a month. Just come and be honest with us. You know, it is impartial advice. You know, as I said, we are not for profit, so we're not in the game of you know, vested interest. We will just give you honest advice, basically. So, and this is what we do day in, day out. So, you know, we'll give you good advice on that one. And if not us, there's a whole host of, you know, D2N2 or your LEP or your council or even your local bank. You know, people are here to help you. Check your personal credit history. That is the first thing we will ask for. As I mentioned, you know, you can. The first time I checked my report, I was quite surprised as well. I didn't know that. Every time you go on a price comparison website, they do a check on you. So I had 65 searches in like 6 months or something, so I was quite surprised at that. But I didn't know that until I did a credit report. I never seen a credit report before that. So whether you're looking to get into business or not, I really recommend just doing a credit report. There's multiple ones out there. You know, you've got the big ones like Experian, Equifax. You've got the free ones like Check My File. I quite like one called TransUnion. It's free and it doesn't make you sign up, and it just gives you a nice PDF file. So just look at that, and if you don't know how to read it, you know, again, go to your bank or give us a shout, and I'll personally look at it for you, and you know, if there's anything on there I can do to help, and we will do. Bring your spending habits in order. You know, not to sound condescending, but when you're just looking to start a business, I think it's natural to kind of maybe not engage in too much frivolous spending, but because the banks and us, we will look at that, as I mentioned, your personal survival budget. We will look at your bank statements, and I'm not saying it will stop you getting a loan, but it will increase your chances of approval if that's in order. Make sure you know your business. Might sound a bit obvious, but it's a major point. And that's reflected in your business plan. Make sure it's a strong, as I mentioned earlier, make sure your proposition is strong. And we will help you do that as well. You know, we will help you find, if you know you're not the best at writing a business plan, our advisors will help you do that. They'll help you articulate your idea into a business plan. And you know, some couple of key points on there: market research. You know, do your research. If you're opening a shop on the high street, if you saw a shop and you know, stand out there for an hour or two and look at just count what's the footfall. I know with COVID it's been a bit difficult, but now that we're opening back up, check the footfall. What's the market size? Is the demand there? You know, competitor analysis, extremely important. You know, what are the other competitors? How many competitors do you have? And which ones are doing well? You know, can I maybe take some points off them and you know, get some ideas off them? Very important. Pipeline sales. The reason I've put that pipeline sales in there is because that's just something actually our assessor likes. Especially if you're a new business, if you've already got pipeline sales. When I say pipeline sales, I mean you've got sales lined up for day one trading. You know, for us that shows us that you know you're going to hit the ground running, so to speak, and you know you've got some business there already. So you hopefully you'll kind of guarantee some sales in month one, and even if you're existing as well, you know, if you've got any types of if you're looking to go into new markets or you made some new connections, and put that in there in your business plan. Tell us about that. You know, we like that's potential for us, so we like to hear about that. USP and unique selling point and competitive advantages, you know, shout about them. If you've got something that your competitors don't have, or if you're doing something different to everyone else, that should be front and centre at your marketing plan, your operational plan, and in your business plan as well. Financial records are up to date. Yeah, you know, we need audited accounts when if you're existing trading, and if you're new, if you've only been trading a few months, we'd like to see management accounts, or even, you know, in basic income and expenditure Excel sheet if not if you're a new business. But yeah, you know, that's a given. And have a good backup plan. That's something that's become even, especially since COVID, even more important now. It's the last thing in the business plan, and it's certainly something that we want to see. You know, you might have all the will in the world to do well, and we wish you the best, but it's important to have some kind of contingencies in place. You know, should the worst happen, you know, how are you going to repay the loan? You know, sale of assets, help from family and friends, alternative employment, and so forth. Sorry, I'm not taking. I won't be too much longer now. Just run through our process very quickly. So when an entrepreneur comes to us, they get assigned a business advisor or investment manager. They work with them to get the application in top shape and ready for the assessor to assess. And it gets submitted to the assessor. The assessor might have some feedback, some questions, but once he's happy with it, it gets approved by the fund manager, and you get the money in your account. And there is post-approval support, so you do get mentoring. You get that as a right, but we also, so for example, if you've got 12 hours as part of your loan for mentoring, even if you go over that 12 hours, we're still here to help. You know, the entrepreneurs that we work with, they come back to us over and over again for advice and for money. You know, so that's a big part of what we do as well, is mentoring and support, and part of what the British Business Bank do as well. Very quickly, just want to run you through some of our top products. So first of all, startup loans. Startup loans is a scheme by British Business Bank. It's an excellent you know, resource. It's the one to go to if you've been trading for less than 3 years. You know, and because as I mentioned, the kind of predatory lenders, you will get charged a lot higher interest rate. This one is 6%, 6.2% APR, 6% fixed. Again, for that one, you just need the documents I mentioned before: the business plan, cash flow forecast. You can get up to 25k per director, up to 4 directors for one business, so potentially up to 100 grand per business. You can draw them in tranche payments. So if you take say 20k, you can take 10k now and take another 10k 3 months after, and that just means your repayments will be less for the first 3 months, and you get a chance to prove your market worth as well. And then for second loan, so say if you take 15k on that scheme, you've got up to 5 years to claim another 5 years in your trading to claim the rest of that 15k as well. So good resource there. Just to give you a rough idea, 10k over 5 years works out to be roughly £194. So it just gives you an idea of what that is. Midland Engine Fund, this is our kind of flagship fund that we have with the British Business Bank. We're a delivery partner for them in the East Midlands. As a business, we start from £500 and we go up to 250,000. We do that by blending these kind of funds. But the Midlands Engine Fund is start from 25k to 150k. They do have other products in that, well, products in the ecosystem, such as the equity funding, proof of concept funding, and the larger debt financing as well. So there's other fund managers there as well. So you know, you can go on their website, or you can come to us and we'll signpost you to the other fund managers if what we have to offer isn't for you. The interest rate is slightly higher on that one. It's 13.25% plus a 2.5% arrangement fee. You know, but that's to reflect the riskier end of the market that we are in. And as I mentioned before, we don't charge any early repayment fees, and you can use this money to springboard into high street lending if that wasn't available to you in the beginning, or you know, even equity funding, or yeah. So. Or if you do well in a couple of years and you feel like you want to repay it off, you know, by all means you can do that. And then the Community Enterprise Investment Facility with Big Society Capital, that's quite similar to Midlands Engine Fund, although it's national, and it's aimed at areas of deprivation as well. But you'd be surprised what the class is in areas of deprivation. The Shard is classed as an area of deprivation. surprising. I think because I don't know, the street behind it or something. Just my second to last slide, so not much longer from me. Just wanted to highlight some of the great case studies that we've done, and 3 of these are BAME entrepreneurs. So Inclusive Boards, I believe his name is Samuel Kasamu. He's come to us twice for 2 lots of funding, took 100k first and then 150 the second time. He's invested a lot into digital marketing, staff, his CRM, and he wanted a new premises. That business basically they place, so they're helping the problem of underrepresentation in boards in companies. So they place BAME board members in companies, they recruit them and place them as well. So great work that they do. All Flavours, Trevor, I know him personally from Nottingham. He used to have a pub, and now he's opened this Caribbean takeaway. Great food. If you're ever in Nottingham, pop by. He had 40k. That was purely an MEIF loan, and it was used for staff, a car, and some kitchen equipment. And then Eagle European, they're a Leicester-based business. Excellent business. They basically, I put that one in there. I found it quite interesting because they took 250k from us to buy a plane, and a bit for working capital. And what they do is they transport vital organs across the country. So really important work what they're doing. And what I'm kind of trying to demonstrate is that the range of businesses and the types of the reasons what the money can be used for. And finally, Sarika Tamara Styling, only 2.5k from startup loans. She's an influencer, and so she wanted some equipment for fashion shoots. So let's see where that one goes. And I believe that's it. Yep. So there's my details. Feel free to come and see me directly, or take a note of it, or just call our office line and ask for me. And yeah, if you want to have a one-to-one consultation, have a sit down, talk about your funding needs, by all means, please get in touch. Thank you. Should I introduce the next speaker?
Any questions?
Oh, sorry, any questions?
Sorry, go on. No. One question I had was, does the formation have to be a limited company, or can it be a sole trader or partnership?
So with startup loans, so the question was the formation of the company. With startup loans, it can be a sole trader, it can be anything, partnership, limited company. With the MEIF, with our mainstream fund is what we call them, generally we would expect it to be a limited company. Yeah.
Sorry, my question was, I forgot, is it just for Nottingham area
No.
businesses, or is it national? Or?
So yes, so we predominantly operate in the East Midlands, the eastern, so from Scunthorpe to Luton, because Luton, South East Midlands apparently, and we so that's our kind of heartland. That's where the MEIF fund is for sure, and startup loans we currently have a provision to do it nationally, and the community investment fund that's national as well.
Okay.
Yeah, but even if it's outside of the borders, and if we can't help you, we can certainly signpost you to someone who can as well.
Okay, thank you.
Out of 10 applicants, what is your success rate of approved requests?
So the kind of approval rate.
Yeah.
It's I can't give you an exact percentage. I can get back to you if you want an exact one, but it's very high. Reason being is, it's if you the ones who actually start an application, do the work, the business plan, go through the whole process, those people it's very high. Our approval rating is probably in the 90s, but the reason being is we pre-qualify applicants as well. So that's why we ask for a credit report straight away. A business advisor will sit with you, or I'll sit with you, and I'll hear your business idea, see if it's if it's a good proposition. Before we start committing to some time-consuming application work, we pre-qualify, and we because the last thing we want to do is waste your time. So yeah, at that stage, if you're including that part, I don't know, but at that time, obviously we do turn away some people, but we're in the business of helping the people who have already been turned away. So we try and do everything we can before we turn someone away. But in terms of application process, no, it's quite high.
Thank you.
So my question is, typically, what's the time frame from when someone comes to you as a business to them getting finance, if they do get finance?
Yeah, the timeline. It's slightly frustrating reply. Mine is going to be for you. How long is a piece of string? I shouldn't say that actually. Look, if you come to us already with a business plan ready, cash flow, everything's ready, your account's packaged up, and often if you're coming through a broker, and brokers have been very, very helpful to us, especially for the COVID period and delivering the RLS loan and the CBILS loans, because the engagement is really good. If you're coming as packaged up, we can. I mean, one of my first when I used to be an advisor, I turned one around I think in 8 days, but it depends on yourself really. We go at the speed that you go at. So if it takes you 2 weeks to write a business plan, you've got to factor that into it. To give you a ballpark idea, not very ballpark, it's quite vague, but 2 to 6 weeks. Yeah. Startup loans are generally a bit quicker. So yeah, I'd say 2 to 4 weeks on a startup loan, maybe 3 to 6 weeks on a larger loan. But you know what, they have been taking longer than that. Because some things can change, or you might be stuck on a certain thing, or a lot of the times waiting on your accountant for your accounts. That's why I said, in terms of getting ready for your application, have that already there. Because say, if you're just applying and you contact your accountant, like getting my accounts ready, it might take them a few weeks or something depending on their workflow. So yeah, I'm sorry if that's a bit annoying. I replied, but I hope that kind of answers it.
Yeah, my question was, when you mentioned brokers, is that are there people out there? What?
So financial intermediaries, basically, that's what we refer to them as, and everyone refers to them. They are people who are they have their ear to the ground. They work with a panel of lenders, yeah, and they have relationships with various banks and lenders like ourselves, and they basically broker. They're the middleman between the entrepreneur and the lender. So they, because it's almost like mortgage brokers as well, same thing, and then also an accountant would be an intermediary, someone that refers people to us. So yeah, was that your question?
Yeah, that was the question.
Yeah,
Thank you.
So middleman. It can even be like a business consultant, just someone who's already dealing with businesses, and then they pass brokers on to us. But, I mean, if you can come direct to us, just come direct to us. But if you're already working with a broker.
Okay, so if there's no more questions, leave Lewis Stringer from British Business Bank will be coming up next.
So glad you got all your questions out of the way. I'm sure Charlie is as well. So well done for those questions. I couldn't have answered them better myself, so don't ask them again, I think. I'm joking, by the way. So be warned, I've got lots and lots of slides, but those slides I think will be sent out after the event. So again, I'm going to go through them very quickly, and I'm not expecting you to learn them. And similarly, I'm not going to test you either, particularly if you're nice to me and don't ask me any questions. So it's really great to be here. Thank you so much for the invitation to Be Global, and it's particularly nice to be here because 25 years ago, almost to the day, I started my first job here in Worksop. So it's really good to be back. My name is Lewis Stringer. I work for an organisation called the British Business Bank, and you would have heard Cameron provide a really, really excellent summary of the types of funding, how you prepare yourself, and you might have mentioned a couple of times, thank you, British Business Bank. and that's the organisation that I work for. Okay, so the British Business Bank is a government organisation. You own us, by the way, thank you. And most of our funding comes from government. And what we're there to do is actually make it easier for small businesses such as yourself to access finance to grow. However, unlike a lot of public bodies, we don't give grants, sorry. But we do make it easier for you to access loan and equity funding, because as a fairly small startup business, you will find it difficult, sorry Charlie, through commercial funders to access the funding you need to start up and grow. So our role is to use a bit of your money, thank you very much again, to channel it through what we call delivery partners, who are funders, and actually include NatWest amongst others, to make it easier and provide you with greater options if the first point of call says no. So all I would simply ask for from this plethora of slides that I'm going to do now is that you understand that there are a myriad of different options available to you. So please, please, please never accept no the first time. There are options such as First Enterprise and other funders, and part of our role is to make sure that they're available to support you going forward as well. So, our objectives, because I work for a public body, we've always got to have objectives to measure ourselves against. But in a nutshell, it's all about putting more money into that commercial finance market to provide you with greater options, both in terms of types of funders, but also in terms of types of funding as well. And what I'm not going to do tonight, because I think Charlie is going to probably talk a little bit about the Rose Review and other issues around gender and ethnicity, I'm not going to talk about that. I want to give you an oversight of funding and finance, because why wouldn't I as an organisation? So why? Why does government use public money? Well, it uses public money to support finance, because although we've got a very well established, mature commercial finance market in the UK, there are still issues. And again, particularly for smaller businesses and startup businesses as well. And more importantly, because most businesses in the UK are startup and small businesses that struggle to access finance. So we heard about these massive big corporates that secure multi-million pound and billion pound finance packages. 99% of all businesses are small, and actually the majority of those businesses are what we call micro businesses. So they're less than 10 employees. In fact, they're often one person or two persons. Okay, but actually the really important thing there is that they form a really important part of the economy of the UK in terms of employing people, turnover, profitability, taxes as well. So again, it's massively important for UK government to support its SMEs. And as I said, how we operate, I really do apologise. I haven't got my checkbook on me. You can't ask me after the event for a bit of money. I'd love to, but I haven't got any. But actually what we do is we channel that funding in a certain way to make sure more businesses get funded. But we do that through a whole range of different, what we call delivery partners. They're just funders. So whether it be loan finance, equity finance, angel finance, asset finance, all those different types we support to give you options and different funding channels. Who we work with? Well, I think the original slide said 180. Last time I bothered to look, it was closer to 200 different types of organisations. Now, some of these, I'm massively hoping, Charlie, that NatWest is on there. I don't. Woo! Thank God for that. But again, some of those names you'll recognise. A lot of those you won't. And I think the key thing here is actually they may surprise you, because I think probably the last, I could say last crisis, that's assuming we're in one now, the crisis of 2007, 2008, the market was heavily dominated by what we call the big four high street lenders, of which NatWest, HSBC, Barclays and Lloyds are four. What that meant is that government had to do a very specific thing, and I think the phrase is bail out the banks, but actually prop up the banks to make sure they continue to lend money to businesses. And government decided that wasn't probably the best thing to do. Okay, so what we did is we set up as British Business Bank, and our driver is to provide you with different funders, so that if that thing happens again, you have many, many options in terms of where you get funding, and maybe we don't have to do what we did in 2007, 2008. Oh, I hate this slide because it's our success. How arrogant is that? But actually, I think it's a good story, even pandemic, and I'll explain that a little bit, particularly the last slide, the last graph, is that what we basically do pre-pandemic is we put about £3 billion of funding into the marketplace. do it in a very controlled way to give you options and choice. Okay. During the pandemic, we had to step up and deliver some COVID initiatives, and you would have heard things like bounce back loans, maybe, and CBILS and RLS. You may not have. Don't worry if you haven't. But again, so we've changed as well as a business over the last 2.5 years. But we continue to put £3 billion worth of funding into different types of growth programs to encourage businesses to scale up and grow. And the way that we've done that is through typically non-high street lenders. As I said to you earlier, it's about increasing the choice and options available to you. The key thing for us, which is a difficult thing to measure, is that, you know, it's not just about putting money into the marketplace. As Cameron alluded to, it's also about making you aware of your options and making you better prepared to access those various options. And actually, in fairness, providing loads of options is all well and good if you know who those options are. It may just add to the confusion if you're a startup business and aren't really au fait with how finance works in the first place. So one of our key roles, and I'll talk a little bit about how we do this, is also to help you find the right option for you as a business going forwards. And unlike a lot of public bodies, we have to what we call wash our face, which means that we have to give the money back to government because we're lending and investing through our delivery partners. And we've done that, and bizarrely, in the first year of the pandemic, we gave government back lots of money, but that's because we charged our lenders lots of fees to take advantage of the various COVID schemes. So we do actually give return back because our fund managers do a great job. Thank you. So I'm always asked, particularly if you work in the public sector, what sectors are you looking for? And actually, because typically we're supporting quite small businesses, we shy away from that question a little bit because we're what we call agnostic, which basically means that we try to make sure that our fund managers and our delivery partners are accessible to all types of businesses. Because, hey, you know, not all sectors are growing, but there will be businesses within those individual sectors that are growing. So we want to make it as easy as possible for as many businesses as possible to access that funding. But it may or may not come as a surprise to you that we pretty much follow what you'd expect proportionally in terms of the sectors that we support. So again, we have continued to support accommodation and food services, but increasingly, particularly in the Midlands, we do tend to follow manufacturing base, and increasingly IT and technical services as well. But we are agnostic. We don't necessarily focus on particular sectors because we don't need to. This is a bit of a busy slide. So again, I will be testing you on this later. But it just basically gives you an indication of the wide range of different products and programs. Now, you don't need to know the names of these products and programs. Our delivery partners do, but we don't. So it just gives you an indication that we are available to support businesses at different stages and in different ways, okay? But what we're basically doing is putting money through delivery partners such as First Enterprise so that you can access funding, particularly if you've not been able to access it through normal commercial means. And that's what we do. So that's debt funding, which Cameron alluded to mostly in his presentation, but I think you talked about equity funding as well, didn't you? Okay, this is where I ask for a hands up. Anybody can give me a good description of what equity funding is? You can't, by the way. Yeah, absolutely, absolutely. That's not a trick question at all. I do generally need to know what equity investment means before I start the presentation. But basically, it is that. So you know, we've talked a little bit about borrowing money and paying it back. But for some businesses, particularly at a very early stage, okay, that's going to be difficult to do because you may not have revenue ready to hand. You may be on that trajectory of high growth where you have to spend some money before you get customers and get some returns back. So for those sort of instances, we call it equity investment. And you're quite right, sir. It's about effectively putting money into business as an investment, usually in form of shares. And you do so because you expect the value of that business and therefore the value of your shares in that business to increase over a period of time. You get your money back plus a premium. Okay, so it's a different way of borrowing money for a different type of business going forwards. Now, the lending market is pretty well established. These guys over here will be supporting you if other funders say no. But actually, in terms of equity funding, even in the UK market, it is quite difficult to access that equity investment, particularly at lower levels and early stages. Loads of investors out there, including those in the Shard, but actually they'll tend to invest their investors' money in more established businesses, guarantee a return, big ticket values. You know, if you're a small business wanting to grow, you're higher risk. So it might be risk capital, but it's too high risk for them. We use public money to fill that gap. It's called the equity gap. So we are effectively probably rightly or wrongly, the largest investor in early stage businesses on your behalf. And I'm not testing you, but you may have noticed that one of the objectives that I showed in an early slide is about addressing what we call regional disparities. So, wonderful workshop. We are currently standing in workshop. I guarantee you that if you're a business, perhaps in this building, that you're looking to raise £50,000, you are going to find it that much more difficult than if you're in the Shard wanting to raise £50,000. Why? Because if you walk outside the Shard, turn right or left out of that door, you're going to come across somebody that's typically going to invest in business. You turn right or left outside of this building, you aren't going to do that. Okay? So it is literally as much as that. There are other issues as well in terms of ambition, aspiration, awareness of how you raise equity funding. But we recognise that by actually not supporting high growth businesses across the UK, not just in London and South East, that has a really detrimental impact on the UK economy, and it's not fair. It's not fair. Okay, so one of the ways in which we, on behalf of government, address those regional disparities is set up what we call regional funds. And I think one of the ladies asked a question. We are based in the East Midlands now, currently. So actually the East and South East Midlands, and it does go down to Luton, as Cameron alluded to, is covered by a fund called the Midlands Engine Investment Fund. And again, that brochure is on the table outside if you want to have a glance at that and have a look at that. And it refers to some of the funds that both First Enterprise and some of the other funds that Cameron alluded to actually support. Okay, so the intention of this fund is purely and simply to support small growth potential businesses to set up, start up, scale up. And it addresses some of the gaps in the marketplace. And that's all it does. It's no different from anything else, but it's there specifically for businesses in the Midlands to make that playing field level. And it's not level at the moment. So what have we done? So actually the funds were launched fully in March 2018. Delighted to say that across the Midlands, and we're getting our fair share, which is always an issue for me, has invested almost £180 million in small businesses. And bear in mind, it can start from £25,000. That's a lot of businesses supported that otherwise wouldn't have had the funding they needed to start up, set up, and scale up in the Midlands as well. And because, despite reservations of government, those funds, and this one in particular, has worked so well, we got an additional £50 million last year, which we're currently lending and investing at the rate of about £15 million a quarter. And more importantly, we got recognised as we want to continue to do this. So there will be a second Midlands Engine Investment Fund, and it will run from the end of this year, beginning of next year as well. So these are the 4 funds. There's 5 fund managers. Don't ask why there's 5 fund managers. It's a long story. But it basically provides loan funding and equity funding from a very low level for a very early stage business. And it's all about taking risks that normal commercial finance providers won't take. Nice little infographic. We're great at infographics. But again, it does indicate that, as you'd expect in the Midlands, or maybe not expect in the Midlands, that the largest sector is manufacturing. And that may or may not come as a surprise. Bear in mind, you've got places like Birmingham and other places, etc. So I talked about that. It's not just about the supply of finance. It's actually about making it easier for you to access the finance you need. So I am technically the eyes and ears of the bank in the East and South East Midlands. That's official. It's in my job description. That's what I do. And all that basically means is that I present on the bank, but also I'm really interested to know your views about what's working, not what working, so that I can feed that back into the bank and make sure that anything that we do with our delivery partners properly addresses what you're saying to us on the ground. And what we also try to do as a bank, apologies Charlie, as an independent body, publicly owned, and therefore we do the right thing, of course, always, is again to help you in your awareness of what the various finance options that are available to you. Okay, so actually, if you do one thing tonight, or maybe tomorrow, or maybe have the weekend off and do it next week, is you look at our website, okay, because it's got an amazing amount of free information, impartial, about those finance options, what you need to do to prepare yourself, and how you access those options. And if you take away one website, take that one away. It's called the Finance Hub. It is, I will say it officially, it is the best independent website for finance and how you access it and what your options are. That's a hard copy. I've got to take it away with me, sorry. But again, all the information is on that website, and it's really, really, I understand it. So if I understand it, I'm sure you guys will as well. I think that's me done. So I am going to hand over to any questions, but don't forget you've already asked all the questions. And you can always save them for Charlie if you've got any other questions. Are there any questions? Okay, so I'm a fair, well, because no surprise, I'm a fairly old member of staff in our organisation at the moment. So the bank was set up by a gentleman called Vince Cable. And if you know your politics, he was the business minister when the coalition government formed in 2011. It took us 2 years to get all the I's dotted and the T's crossed, as it does in the public sector. So we officially started in 2013. However, a lot of the things that we do actually started before that, so there are predecessor organisations, and what the British Business Bank has done is it's brought all those previous programmes under one umbrella, including the Startup Loans company that Cameron alluded to. So officially, we've been running since 2013. Many of our programmes, actually the oldest one, which was Enterprise Finance Guarantee Scheme, which I won't go into the details, is probably one of the longest standing types of finance products that we've ever done as a public sector. So I think we're fairly well established now.
You operate across the country.
Yeah, so we're British, whatever that means. We operate across the UK. I cover my region. We have 9 English regions and 3 devolved nations. We ignore them. They speak a funny language often. But yeah, we operate across the UK. Interestingly, joking aside, the 3 devolved nations have banks, their own banks, which slightly operate differently to what we do at a slightly different level. We don't as an English country. But yeah, we operate across the UK. My focus is on East and South East Midlands, which includes Nottinghamshire, Derbyshire, Leicestershire, etc. But most of what we do, apart from the regional funds, is UK-wide. I thought we had an agreement about no questions until Charlie came on.
Any more?
Come on, you can ask me anything, I promise. Well, not everything, anyway. I think we're going to have a Q&A session at the end, aren't we? So we can.
Yeah, slightly.
Yeah, I'm going to ask you questions, so be prepared. I'm going to ask you how you find accessing finance. Is it all about grant funding? Because I'm going to challenge you on that a little bit. Okay, be warned. Be warned.
Good to always have a challenge.
Get your questions in now.
Brilliant.
Come on,
Okay.
Charlie. Before
Charlie, yeah.
I'm going to run.
Thanks. Lon.
Don't usually have a tech assistant, this is all right. I think I'm top. Yeah. Thank you. I heard that, Lewis. You're telling them to ask me the questions.
Really quietly.
Not that quiet. Right, so thank you for having me along, Leslie. Thanks for inviting me, and it's a pleasure to be here and represent NatWest today. So thank you. Hard acts to follow. So some great sort of tips around funding and some expertise on that role. I'm going to go into my role now, which is slightly different, but it is very focused around business support. So the NatWest Enterprise, so taking your business further and faster, is from Enterprise team. So a lot of people will be aware that the NatWest is the biggest bank for business in the UK. But what a lot of people aren't aware is the Enterprise team and what they do. So I'm part of that Enterprise team. So the Enterprise team is all about giving that business support And like both the guys referred to, you know, it's about having those contacts and giving you the contacts to who's going to help your business at that point. So it's not about saying NatWest is the place to go, it's about saying what is the best place for you at this moment on your journey as an entrepreneur. So that's just touching on a bit about the enterprise team. There is programs that we deliver, but like I say, it's about us being ready to say, right, this program's right for you with the NatWest, or no it isn't, this one is that's with a different business support organisation. So it's about being that holding hand to make sure that you've got the right support when you need it at that point of your journey. So going on to my role, so there's my mugshot. So Charlie Tunnard, Local Enterprise Manager. My details there, I'm on LinkedIn, so anybody wants to connect, please reach out. The best part of my role is getting to know all these different businesses and all the different sectors that are available and all, you know, the different great ideas. So I get to speak to lots and lots of business owners. But in terms of my role, I need to be a really super connector in the community. So to tell you what's available, both within the NatWest and the programs that we deliver, I'm going to go on to one of those later on, but it is about saying this is what's available in the community. And in terms of the tools that we have, so we do a lot around, as local enterprise managers, a lot around the NatWest Business Builder, which you can Google and get onto that, and that's a bit like a Netflix for business owners, where there's lots of support on there, especially towards startups. But then it's about saying, is that right for that person on the journey they're on at the moment, at that particular time? Have they got other challenges that I need to say, right, I know Lewis Stringer, for example, a British Business Bank, he's the person who has, you know, the other sort of options for you, or the other contacts that will get you to that next place, or to start your business up, or to grow it, whatever level you're at. So what I wanted to talk about today, and alluded to a couple of times in terms of from Cameron and Lewis, is the time to change. So the first thing I want to talk about is this, because we're really proud to be part of this and to have been a part of creating this. So some of you might have seen this, some of you might not have seen it, but if you Google a time to change, Aston University, you'll find it. It's 85 pages, so there is a lot on there to read through, but it summarises it really well within those first few pages, hence why I've got some notes in front of me today. You know, there is quite a lot on this, it's quite granular, but it's really important. So in terms of CREM, that stands for the Research of Ethnic Minority Entrepreneurship, Centre of Research in Ethnic Minority Entrepreneurship, and it's based at the Aston University, as mentioned, in Birmingham. So they're a leading research group on enterprise in terms of diversity in enterprise. Internationally recognised for its work on ethnic minority entrepreneurship. So what they do is they work regularly with business support agencies, including local authorities, ethnic minority businesses, and what they do is they develop evidence-based support for entrepreneurs. So that's where it's key, it's evidence-based support, and that's where this then led to the time to change. So ourselves at NatWest, Migration Policy Group, Stellar Consultancy Services, all got involved and teamed up to create the Time to Change report. So what we found, and you can see, can't see on screen, there we go. If we implement the changes from this report and the support outlined in the report that I'm going to go on to a bit more in detail in a minute, then the contribution of ethnic minority, which we went to earlier on Leslie's slides, the UK economy could go from 25 billion, so it could go fourfold to 100 billion in terms of gross value added. And that's why it's really important that we get better at this, we get better at supporting ethnic minority businesses, and we take the time to change to enabling more ethnic minority businesses to grow in line with the wider business population, and recording ethnic minority business ownership more accurately to better recognise the value of ethnic minority businesses and to target support more appropriately. So what we want to be very clear about in terms of the Time to Change report, and as an organisation, that these three statements, we're aware that it will depend up and down the UK on the different type of communities. It's about adapting, and we want to be very two-way in that respect. We want to get into the communities, and we need to understand the different communities and how they work up and down the country. We want to get closer to that, to give better support, to get to where we said earlier about getting your funding ready and being in that place to then have those conversations. So no one size will fit all. It will be about, you know, looking at the regional differences, looking at the influences, look at what's worked already. So there's a lot of things we're doing already that's working really well. It's just, is it in enough places and is it out there enough to be known about? That's what we need to do. So collaboration will be the main driving sort of focus on behind that success, really. So the report recognises the issue of discouragement and tackling the perception of finance barriers. So here's just 3 findings that are from the report. So the incidence of discouragement in ethnic minority businesses is higher than businesses in the SME population in general. So particularly because of the issue of distrust. And more than 90% of all discouraged borrowers are credit-worthy, but have never approached a bank. So quite scary, you know, 90%, it's not, you know, 10, 15%, 20%, 90% of discouraged borrowers are credit-worthy. And the challenge for the finance sector, particularly banks or ourselves, is to improve marketing and targeting of ethnic minority businesses with innovative engagement initiatives such as local community hubs, you know, getting into the community. And we spoke to a lot about this, Lewis. Hopefully we'll speak to Leslie as well. You know, we want to be in the community, we want to be that visible person, and that's my part of my role as local enterprise manager, is to very much be around and know what's happening to get that support to different people within the local proximity. So here are there's 10 steps to transform the support for ethnic minority businesses. I've just brought 2 up here. Develop more sustainable and quality business support to help ethnic minority businesses realise their growth potential. And coming up with new ideas or leading by example through improvement of existing infrastructure is key to that, or activities within respective organisations. And gather better data on entrepreneurial diversity to foster evidence-based, so going back to CREM, they really look at the evidence-based policy making. So this will mean putting together both internal and external working groups to work closely with policy experts and with frontline staff. So like myself, you know, we understand we need that support. We need to then be able to build our own capability, to have those difficult conversations, and to understand how the different communities work, so then we're able to build that trust and then give that tailored support that works in the different communities up and down the country. And of course, there's no better way to provide that than getting really involved in the ethnic minority business, you know, consultation stages. So we actually get in there and get you involved in that very early part of the consultation, so we know where we need to go and listening to the feedback from the communities. So a lot of the support we are already doing. You know, I'm going to touch on a bit of that later on about what we do on one of our programmes. You know, for ethnic minority businesses, it's already a key purpose within our organisation, and there's lots of things working well. But like I said before, it's about getting it into more communities. It's about really wanting to stand out and do it in every community, not just here and there. We want to be up and down the UK doing these good things and tailoring it to how it works in different communities, but making sure that we're there and we're present. So this will mean building relationships. It's all about building relationships and building relationships with community leaders. Neutral spaces such as community centres, or like this fantastic, you know, place we're in today. It's about getting that neutral space or other hubs that we can reach the right audiences. You know, it may be less daunting for someone to walk into a citizen's advice than walk into a high street bank, because that's the perception that we've found from the CREM report. You know, walking to that bank can be scary, walking to that finance person can be scary. Let's get into a comfortable environment where we can give that support and it's open to conversation. So like I said, this leads us on to nicely the NatWest Accelerator. So this is something that we've got as a programme that's already up and running, and it's a 6-month programme. It's available to NatWest customers and non-NatWest customers, so it doesn't matter who you bank with. But the NatWest Accelerator Programme, we're in the middle of an application now, so the 12th of August is the application window closing date. So you've got until the 12th of August to get an application in. The programme starts in September. So I know Sajid, you were already looking into this, but in September you get a 6 months programme, and on that programme, so it touches on it there, you'll get coaching, so you'll be supported by the acceleration manager. It's helping to develop both you and the business. It's very much about people on this programme we want are the people with the growth mindset, those people who are already thinking of the next thing they want to do, or that next bit of funding they need to get to the next level. Well, we want to give you that coaching and that support to do it and move your business forward. Community, so join a vibrant community of like-minded entrepreneurs, using the co-working spaces. So we've got 14 hubs up and down the country. The closest one here, I think geographically as we stand, is Birmingham. Up north there's Leeds. So there's lots of workspaces and options to go in, be part of a community, have the coaching, meet like-minded entrepreneurs, you know, pick a day a week where 4 or 5 of you might go in, you might be from all different businesses, but you can hit off each other and get that real community of support. And then networks, as the biggest bank, as I mentioned, for business in the UK, are experienced ecosystem managers. So Debbie Lewis knows well. You've got all the access to, you know, unrivaled partner and mentor networks across the UK that you get from the NatWest, and it has to be at the right time for your business. So in terms of that journey, again, wherever you are on it, it's about, you know, what's the best connection for you at that time. Thought leadership, so focused on your needs as an entrepreneur. So our program of thought leadership and content could support your acceleration. So we put on events. So for example, you know, there's over 80 entrepreneurs on the Birmingham cohort at the minute, and 80% of those might be struggling with marketing. So what we'll do is we use our events on a Wednesday, 60 to 90 minutes long, get everybody in, and we'll say, right, we've got a marketing expert here to do an event, to talk to you all, to upskill you all, potentially give you free sessions off the back of that. So it's all about that learning aspect, having you in as a community, and that 6 months is just trying to propel you to that next level. You know, a lot of entrepreneurs, well, some entrepreneurs will have worked in big organisations, or will have worked in small organisations, or will have had a boss. So having to be that boss, having to be that everything, this is, you know, giving you a coach and someone to sort of set your targets, set your goals, and give you some time to say, right, I need to work on the business, not just in the business. So that's what this is really about. So in terms of the ethnic minority business support that we give on the Accelerator programme, 20% of all Accelerator places within each hub is particularly for ethnic minority businesses. In 2020, we actually had 26%, so we've not got the data of 21 yet, but 2020 was 26% of our Accelerator programme was ethnic minority businesses. So that's where we are trying to get the support to everyone and make sure everybody's aware of it. So please, any questions about that, you know, get in touch with me. But even if it's just to chat about your business, you know, I'm all ears just to have that conversation. That's the best part of my job, getting to know about all these different businesses and saying, right, what's your challenge? Right, this is the person I know, or this is the programme that's good for you, or we can actually look at that together on the programmes that the NatWest have. Okay. The next 2 slides, you know, borrowing for your business and top tips, we've probably done quite a bit of. I think Cameron did quite a bit of this as well, about your credibility, you know, make sure you've checked your credit score. Security, so if there are any assets that you could be given as security. If it's a house, for example, if it's you and your partner who own the house, is your partner going to be happy as using that for security? So I'm not going to go too much into that. Proof of finances. Top tips, so having done your homework, have your business plan. So Cameron talked a bit about that. You know, that business plan is not an easy thing for a lot of people. It doesn't come natural. If you're brand new into business, what is a business plan? What's a business model canvas? So we've got support available for Business Model Canvas. We do events for Business Model Canvas. I've done events for that. But I've also got, you know, people in the network who are experienced at putting business models together and holding your hand through that process to then say, right, you're definitely funding ready, but let's put it on a piece of paper and make sure that you know exactly where you're going with this to then back up your application and get that funding to take it to that next level. And hopefully from the previous pages I've talked about, you can see from the business support that's available, and you know, all the fully funded programs that are available in the ecosystem, just take advantage of it, and that will get you to that stage of being funding ready, as you know, we say. So thank you for having me today. Louis said I think we've done with questions, but I'll ask anyway. Is there any questions?
Well, I think what we're going to probably do now is we could get yourself, Charlie, Cameron, and Lewis to sit on the hot seats at the front. We're going to, So I think it'd be a good idea to do just to put you all together. Not as if it's like a firing line or not, but it's just on live, it's still streaming, So, just pull it down. No, thank you for that. It was really helpful. There's a lot of information to take in, but I think it's good just to make sure that people are, equipped with that information and that knowledge. Just one point from myself. It's from the point of view where, because we deal with obviously a lot of small businesses, and we tend to get to a point where businesses try to do it themselves first. Either go to family and friends for finance, or do it through savings, etc. So a lot of them don't get to the stage where they want to go to a bank straight away. So I was wondering, obviously with your role, like Charlie, out there in the community, how long has that been going for? What would the approach? How's that approach been like?
Yes, in terms of accessing, going into the banks.
Yeah, I'm obviously being more community focused, because there are banks who've tried that approach before, but then have rolled back.
I think. I think for me, one of the biggest feedback I get from sort of business, I suppose banking customers, who actually banked customers, will say they don't have a relationship manager anymore. There's not a lot of face-to-face support. So that's where my role is there to say, well, we want to give you all of this support to help you grow your business. And then it's about, do you need that face-to-face support to grow your business in terms of, strategically, or is it the finance side? So that's why I'm there in the communities, to sort of get around bit of legs and sort of find out which way it goes, rather than just having the relationship manager who does all the finance and all the banking side. But actually, have you had enough support to rise up to just go straight into the banking? Have you had any support for business plans? Because the relationship managers, they're the finance side. They don't really get involved with the business planning sort of side. So my job is to get around the communities and find out where they are in the journey, and who's the best to support, and then from there see who whether it is us who can help with the finance, or if it's these gentlemen, or that's why we're there in the communities, really. Does that make sense?
Yeah. Okay. And just one follow-up question about how big is your patch?
Yes. So my patch at the minute is sort of abnormal in terms of NatWest Local Enterprise Manager. So I cover Nottingham, Sheffield and Derby as my three main cities. But in terms of that's being proactive in those areas and trying to have a presence. But I have got a bigger patch in terms of Lincolnshire, South Yorkshire, Hull and Grimsby also fall into my remit. So it's quite a big patch. But in terms of actually getting into the community, Sheffield, Nottingham and Derby, that I'll want to be out in and be speaking to people.
So is it just you one?
Just me. Yeah.
Okay.
We've got the regional ecosystem managers, Debbie, who supports. So we've got plenty of support. But in terms of us who get around and go to the networking and go to find new business owners to see how we can support them, it's me. Yeah.
Okay. Anybody else like a question? Go for yourself first.
Right, my name's Barbara. Now, I know somebody who they were working, paying the bills, everything, and they lost the job. Ended up having an IVA, has a brilliant business plan. Could they come to you? And would they be successful?
Do you want me to hand that over to you?
I mean, Do you
Is
look
that for me, sorry, or
Sorry,
all
any
three
of
of us?
you.
Yeah.
All three of you. I mean,
Yeah, probably a good one for you. That.
I mean, do you actually look into sort of, let's say, the 5 years before, you know, into their bank accounts and see their spending, and they were until they lost this job, no fault of their own, ended up with an IVA, but they've got a brilliant plan. Would you turn them away?
So, when it comes to, so you were saying about, you know, do we consider their past experience
Yeah.
and stuff? Not so. If it's an active IVA over £500, we wouldn't really consider the past stuff. But in terms of like other things like defaults, so if they've got, because in finance we say as a rule of thumb, 25k of unsecured debt is kind of what we see as a limit. So if they surpass that, and I'm just thinking back to, I can't name him, but I'm thinking back to a client of mine who had a really excellent record of borrowing, and then went through a divorce, and you can just see from that month it was just downwards. So he was borderline on our credit policy, maybe slightly out of it. Sorry, Lewis. But we considered that. We did in that instance. He had a really good business plan. He took some steps to improve it, and I think that was what was in the end was a determining factor of us to say yes. But yes, we in that instance we considered it. When it comes to bankruptcy, so actually with the startup loans, if it's less than £500, then we can still consider it. If it's more than that and it's still active, then no. If you manage to settle it, and then it comes off, if it comes on your credit record, credit history, then we can maybe look at it again as well. But we need to address that before.
This is where us as a bank, you know, being totally honest, and Lewis alluded to this earlier, you know, and in terms of startup businesses, this is where we particularly struggle to get funding, you know, through the door sort of thing. So this is where, you know, I come in to sort of find out and understand that, rather than sending it straight to a relationship manager, to then say, well, you know, these are the other options in terms of where you might want to look at the minute. So it's about looking at then our panel and who's on there, or referring it to, you know, these guys to then take that sort of expert look at, you know, you might pay a higher rate, but it's the case of getting what you need to for now, helping your business to grow, and then potentially refinancing to the bank later on, potentially down the line. If you want to add on that, Lewis. No.
A couple of questions. I'll go to you first.
Yeah, my question to Charlie, really.
Yeah.
The accelerator program. So my understanding is you've got to make an application, and it's subject to being successful.
Yeah. Yep. So the application. So anybody can apply. So going back to Lewis saying about it's sector agnostic. So last year, so every program until this very one that we're going on to now in September, you had to be either climate-led, purpose-led, fintech, so financial tech business, or high growth. So this time it's anybody can apply. So we'll look at all applications, but it's more about the individual and them having that growth mindset. So once you put the application in, you can go on a discovery event. So we've got a couple of those going on at the minute. You can go and have a hub tour, and the discovery event will be the acceleration manager who will answer lots of questions about the program, because they're actually on it, and I'll be there as well, but they're the ones who run the program, so they'll answer the questions. We've got a virtual one as well, so you can go on virtually, and it's exactly the same experience, you just don't use the hub space. So you might say, I'm better going on the Zoom events and having my Zoom coaching via Zoom. So there's all those options, but once your application's done, and you know, you're happy to go on and you want to do the application, you want to go on the program, you've got that growth mindset, you then have an interview. So the interview is not like a job interview, so it's not get your stars ready and, you know, your situation, your task, your action, your result. It's about you, about your business, about your background, about your expertise, and just making sure that, well, for starters, you know, the course is right for you, because I've said there's other courses, other programs available in the ecosystem from other business support that may be better suited to you at this time. But the other part of it as well is us checking that you know, you're right for the program and you're the right individual to take on the challenge of, you know, getting your business to that next point. So that's all it is: application, interview, very informal chat with the acceleration manager to see if we can get you on the course in September.
Cool, thanks.
Okay.
Thank you. My question is around the financial barriers. As minority business people, maybe we are coming from a very bad background, poor credit, but I also want to, to get into business. How best can you help somebody like that?
Yeah, so is that in terms of from building knowledge and experience point of view, or is that from in terms of the no finance point of view, or a bit of both?
Well, financially to start.
Financially to start.
At times when you apply for these startups, even a startup, at times you can be refused.
Yeah.
So it's so hard to break the barrier, but how can you best help?
Yeah, it's different. I'll pass it over to Cameron in a minute, but what I'd say is, in terms of getting you to that level and to that finance ready point, is reach out to the support in terms of, and that's what I've mentioned in there. It's about us being in the community as well to tell you the support is out there, which you need to know about. Is we need to give you the heads up what's around. There's lots of different places. There's the British Libraries. There's the D2N2 the Growth Hub. Will give you the support to get you to a place where it's harder to get refused for finance. Yeah, it will always come down to the individual, and every situation for lending is different. It's based on the individual circumstances, and it might be down to credit in the end, etc. But if you can get yourself into that position of having all that business knowledge in terms of the business plan, the cash flow forecast, it puts you in a lot better position to then say, right, especially if you've got a business advisor, to then say, look, been working with this individual, this is a business plan. They might even give you a bit more background to then pass over to such as yourself, Cameron. Is that right?
Yeah.
If you want to sort of elaborate on that.
Yeah,
Does that
no,
make sense?
I completely agree with Charlie. There is a slight two-step process, well, more than two steps, but basically two-step process where, first of all, you need to be investment ready. That's not to say you shouldn't come and approach us at any stage, and that was my first point. Come and talk to us and be honest. We can start you along that path. My point is that you might not be investment ready at the point of approaching us, but we can help you. Programs like the Accelerator and advisors, the work that advisors do, they can help you get to that stage, and make sure that you are taking the right steps, and not being kind of busybody just for the sake of it. Taking the right steps in terms of what the bank will be looking for. And yeah, so as Charlie was saying, that is the first thing you need to, well, not the first thing, but that is one thing you need to address is, are you investment ready in terms of, is your proposition right? Yes, there will sometimes be just hard lines drawn in the sand where, like as you say, if you do have a really big IVA or CCJ or something, then that could be just a barrier. But in terms of getting ready for investment, I think it's going back to the points of getting your finances in order. And I know it's sometimes easier said than done. You can just sit here and say, get your finances in order, or sort that out on your credit report. But you can start taking steps, or from not even getting to that stage in the first place. If there's something that's going to be a red flag on your credit report, try and avoid it in the first place. And I know that kind of is easier said than done, and sometimes you can't avoid it. But yeah, that would be my recommendation. And sometimes it is a process as well. So,
Thanks, Cameron. What I'm interested to know is, I think you started to talk about this, and don't need to make it too personal, but what do you perceive the barriers to be as you currently sit? Again, without making it personal at all, but I'm generally, as I said to you earlier, I'm generally interested. We've had this discussion, haven't we? I'm generally interested in what you perceive the barriers to be, because for me, that 90% number is horrific. It's scary. So we need to know, don't we? We need to know why only 10% of certain groups approaching mainstream funders. Not because, if you've got alternatives, great, go for it, do it. But actually, in most cases, I'm guessing you haven't, or they haven't, or they do things that we probably wouldn't want them to do, or shouldn't do. So I'm really interested, genuinely interested to know, what do you perceive the barriers to be? I don't face them, but I am who I am, and therefore it's important, genuinely, without getting too personal about it. What are the barriers? We need to know. I need to know. I'd like to know. Yeah, no. I think you did at the start. Yeah, absolutely. And I missed it.
Yeah, I think she talks about when you're coming from a place where you have maybe poor credit history,
okay.
and maybe just no finances and things like that. So how can you help to support in such a way where you don't have that good credit history to start with, but you have the zeal to start up a business? So what do you do? Something like that.
I mean, I think you are doing a great job, but at the same time, you are discriminating those of a bad history, or who are coming from, because when I want to try something, then I'm refused, and I don't have anywhere to go. I'm trying to do something. I've got the passion to do it, but financially, I'm just being held back because I don't have the finance, and I don't have maybe a big family in here that can sponsor me like what most of the people can have. So in that way.
Yeah. So first and foremost, let's talk very generally. There's a credit history there.
Yeah.
It's taking advantage of the support that's available to start building that network up, because one of the important things in terms of the accelerator, as far as I'm concerned, Charlie, is the fact that actually you'll be in a room, whether it's virtual or not, with like-minded people. Don't worry about them being competition, because you don't need to worry about them. These are people that are going through the same situations and the same issues and the same great news and positives and that you're going through at any one point in time. So the accelerator is a great way of building your network. Does it immediately solve your credit issue if you have one? No. But again, you probably will come across people that have been in similar positions historically as well.
So I just wanted to add as well, it does seem like there is, we need to get a little bit personal there. So I think would be a good idea sitting down one-to-one as well, so I can actually look at your, because it is case-by-case basis. There is individual problems. So if it's yourself or someone who's currently going through it, the least I could offer is to look at the credit report and highlight any steps you could take. I'm talking about practical steps you can take. Because without going into more detail, I can't give you more of a kind of a bespoke solution, if that makes sense.
Yeah, and I'll just say, because I've done, 9-10 years in personal banking before coming to business as well. And from a personal banking point of view, you go to a bank, you look for a loan, they say no. What do you do? Whereas sometimes in business, what I'm trying to get across, hopefully from the slides and my role is, business banking, if the bank says no, it's about then, who can help me? It's not about you then saying, it's my business, I've got to sort it. It's about thinking, there's other options, there's other business support that will get me funding ready if it is the case the other option can't help at the minute. But don't think that, it's a done and dusted, that's the end of the journey. There's business support out there that's not always just the first person you go to. It might be them who put you onto a better contact, but that's why hopefully I'll be more visible in the communities to say, rather than you going to submit an application straight away, I can get a feel, like Cameron said, get an individual feel and then say, right, let's have a look where we can go. Is it NatWest or is it this person?
So again, it comes down to that, sadly, rightly or wrongly, through economics. I think that personal touch has been lost in terms of the finance market, particularly at the lower level. You've got an option here, you've got two options here of people that you can sit down with and talk around that personal story that you experienced and to see whether or not there are routes out of that for you. But again, fully appreciate that that credit issue is sometimes a big one for some people. And although we can stretch to a certain degree, it requires that personal conversation, because literally if you don't have that personal conversation, you'll probably continue to get the same answer. But it's not easy, but you know.
Yeah. Thank you for that. I'll come in. Just one quick question I wanted to ask as well. Cameron, you mentioned something about investment readiness. Yeah, so can you just unpack that a little bit? Because an organisation, a business startup, may have done their research and seen the opportunity, but then come to a banking institution and it's deemed not investment ready. I don't know if you can just unpack that a bit.
When you say banking institution, do you are we included in that?
Yeah.
Okay, all right. Okay.
You lend money.
Yeah. Okay. Yeah. I mean that's like some of the points I highlighted about being investment ready. It's basically being. And just before I go on, it's not to say if you're not investment ready, don't approach us. I'm just saying being investment ready will just increase your chances of approval. So it's basically just showing yourself in your best light possible. You know, we've talked about credit history and personal experience. I'm talking more about, when I say investment readiness, yes, that is obviously the personal part is obviously plays a big part. That's the first bit. But once that's out the way, I'm talking about the business proposition. You know, it's really having kind of a slick business plan, a well thought out financial projection sheet, and you know, making us want to invest in you, like saying, you know, making us jump up and down to try and invest in you. That is what I mean by that. So it's.
Yeah. Okay.
Thanks. I'll go. Charlie will have a more theoretical, maybe a theoretical approach to investment readiness. I won't. So for me, investment readiness is actually about the alignment with the funding. Okay, whatever that funding might be, because in reality, you stress the lending side. Lending from an investment readiness perspective is very, very different from lending from, for example, angel, which is a type of an equity investment. It's very, very different. So the best way of approaching it is the alignment with what the funder is looking for. So actually, it's a knowledge and awareness of what the funder is looking for. Okay, apologies, Cameron. It's not about a slick business plan, because actually the due diligence that these guys and other investors will look at will sift through that, and they'll use their judgment. Is this just words or is there substance to it? So it's actually the alignment with the funder. With a loan funder such as First Enterprise and NatWest, they're looking at primarily serviceability of their loan and taking any security just in case the worst happens. With an equity, it becomes even more important to look at the market potential of what you're proposing and therefore the potential growth. So actually it's about investment readiness for me is increasingly around alignment with what the funders are looking for and being aware of what the funders are looking for and seeing how your proposition, whether it's glitzy, got loads of diagrams, 79 pages, actually fits with what the funders are looking for. And that's the key for me.
The alignment.
So just to clarify as well, thank you, Lewis, for highlighting that. So when I said slick business plan, I meant the business plan talks to and supports your cash flow projections. So it does all come back to the figures in the end, but it's that connection as well. And we will see through the jargon, you know. And to be honest, an 8-page business plan will probably prefer that to a 30-page business plan with loads of words on it. So to the point, but you know, just make sure you're getting your point across. And you know, forecasting is looking at the future, and it is, I suppose, kind of guesswork, but it's making an educated guess and an informed guess based on your product and your market and everything. So just making sure, like I said, going back to the two words, is it realistic, is it achievable, You know, when you're doing your forecasting, it's just important to remember that, because then off the back of that, that's where we get, oh yeah, they can. We do think that they can service our loan, and they will be able to sustainably grow in the future as well. So.
Brilliant. Okay. So another question.
I want to refer to the Time to Change program by NatWest, which is to help to, it's a blueprint for advancing UK ethnic minority businesses. Yeah. And you did say that if implemented, it will increase the contribution of the minority businesses from £25 billion to £100 billion.
Yeah,
Yep.
gross value added. Yeah.
Good. What I feel is borrowing from the recent bounce back loan, we find that to implement that program, government had to waive aside the creditability of those that had to benefit from that program. And so it was a very good program that saved UK businesses. So I'm thinking, as one of the strategies to achieve this time to change, is to give a waiver to the most critical factor why the minorities are not getting into businesses.
Yeah.
Because they will have some bright ideas that will tick the other boxes, except that the credit score of the individual is on the bad side.
Yeah.
So if you want to salvage such good ideas to become a business, I think using that government already tested approach is to take off that risk, and government should guarantee it. Let it go, because until now, I don't think we have any record saying that the bounce back loan was a failure.
Was it what, sorry?
We don't have any record to say that the bounce back loan was a failure, or there are bad debts that have crumbled the capital invested in that program. Rather, we know that it sustained businesses from going bankrupt during the COVID period.
Well, it was very interesting to see if they had a report for it, so I do see where you're coming from. In terms of the time to change, and you raise a massive point there that's, you know, part of that report that's put together, because that's what we're saying in terms of working with internal and external policymakers. It is to look at that policy. So going back to that lady who asked about, you know, in terms of sometimes the credit history or the credit background, well, it is about working close with policy experts to get that closer to, you know, what everybody would like it to be, both the bank and the lenders and the, you know, the entrepreneurs. So the Time to Change report is all about as well getting them better policies to get better products and more, I suppose, kinder products, kinder lending. But it will take that time to get into the communities, speak to the different policymakers, and then, you know, deliver something. If it could be as good as the potentially bounce back loans and easy as they were to get, then let's see. But that's what, you know, what we work towards, getting to easier decisions, because we've worked with key policymakers and listened to ethnic minority businesses, and that's why the report was done.
I think the gentleman asked a very poignant question, and I saw Lewis smiling. Lewis, do you want?
Yeah, switch the cameras off. I'm not sure if it's a smile or a grimace. So we manage bounce back loans amongst other schemes, and if only it was simple as that, and it's not. Okay, but again, maybe discussion to be had off the camera in that respect. I think what's actually important is that particular product was put in place for, I'm going to say, very exceptional circumstances. That's not to say that this agenda is not an exceptional circumstance, okay, at all, or to belittle it in shape. But it was set up for a particular purpose, and it was a political, with a big P decision to do that, okay. Is there an appetite to do anything similar to that? We're hoping we don't need to. So actually what I think is we need to be a little bit more sophisticated than that, and actually look about what the real barriers are. If you're saying to me that 90% of that group do not speak to a bank because they've got bad credit record, okay, we address the credit record. I don't think that's the only issue. It may be part of an issue, but I think that's a very small part of the issue. So actually that's not going to crack that nut, because bounce back loans, as you well know, was actually delivered through a very small number of lenders. These guys couldn't use bounce back loans for various reasons. These guys could, and actually in reality it was only delivered by the 4 high street. So if the answer is that you're not approaching high street, bounce back loans or equivalent is not going to solve that problem. I'm being very simplistic there. Okay, so actually we need to look at what exactly are the issues and then develop a project or program, which is why I'm turning around to you and saying, what are the real issues? Is it just about credit issues, or is there another reason why 90% of those groups aren't knocking on Charlie's door? Because actually bounce back loans wouldn't solve that problem. It wouldn't solve that problem because it wasn't a due diligence per se issue. It was accessibility through the high street bank was the issue. That's why it was, in terms of deployment, was successful. Time will tell whether or not it was successful.
Yeah. And just before I hand back over to the other participant to ask a question, obviously in back of, I think it was the end of March, we obviously did the focus group, and a video will be coming out and we're hosting, and a report should be finalised. Yeah.
Again, so again, I'm going to have a conversation with you again, as we did that night. So again, I sense from that discussion, which was a great discussion, and Charlie's colleague was there, that actually the biggest area was we don't think you as a bank are accessible to us. Was it not?
That was one of them.
Go on, tell me the other ones then.
I think that this obviously about the representation. So obviously,
the person you were seeing.
Yeah, the person you were seeing.
Yeah, absolutely agree with that.
And then obviously that creates links.
Yep. Agreed.
Approach as well. So obviously, that's obviously one of the reasons why we're here as Be Global, is to be that link between the business and their ideas, etc., and then connecting them to, those institutions. So it's all good and well saying that, have your business plan been ready? Have you done your cash flow forecast? Who's helping them do that? And I think, because sometimes you can have a great idea in your mind, but putting it down on paper and putting it in a way that we as institutions like it to be done, can be two different things.
Yeah, so you're absolutely spot on. So again, for those that weren't necessarily at that meeting in March, which is probably most people, is that in reality it was that cultural thing. And let's not put culture into a box. It was culture in terms of language, the way you present, how I access you, how I can speak to you. Do you speak my language in a very broad sense, wasn't it?
Yeah,
are you accessible to us?
But also representation. So if you don't see people from your communities,
I totally agree.
Of those institutions,
which is why I said earlier, I don't think I have those issues because I don't know if I do or not. So you're dead right, and it was less about the supplier finance and more importantly how it's delivered. I think, wasn't it? I think.
Go back to report. We'll fresh it out with a report.
Absolutely.
Yeah, my question is actually a continuation. We talked a lot about business plans. I think that could be a barrier to some extent, but is there some kind of a template what's available or some kind of format?
Yeah, I'll steal Cameron's thunder. So I'd say this, wouldn't I? But if you actually do look at the Startup Loans website, and again, apologies if it wasn't in the slides, we can provide that separately. But again, I've got to say this, they've got some great templates that you can use, whether it be that sort of narrative business plan or whether it be the forecasts and the templates for that. So, they're good. Everybody has those to some degree. Again, it just comes down to knowing about it and the accessibility of it. And dare I say it, having somebody on the end of the phone or Teams or Zoom to ask that silly question, which is not silly at all.
I'm just going to say, there's then the business model canvas where it's all on one page. So Alexander Osterwelde, YouTube videos, gives you all different, ideas of how to put a business model canvas together where it's all on one page, and then you might then do your business plan from that or before that. But the business model canvas, because it's all on one page, it makes it really nice and easy for you to know, what's what. It's everything on one page.
And actually, the business model canvas, as Charlie alluded to, which if you don't know about, don't worry. It's literally 4 blocks and squares on one piece of paper, which gets you to think, why am I doing this? Who am I doing it for? What am I getting out of it? And probably another box on the left-hand side. But it asks you all those obvious questions that sometimes you're scared to ask yourself because you're just doing it, aren't you? And it's really great to take that slight step back, particularly if you have somebody to throw it off who's not going to just take your word for it, to actually look right from the outset what you're doing. And then you can buffer it up and put the figures in. But to get those broad principles of, why am I doing this? why am I doing this, is actually a great way of starting. And then write your business plan, because again, the business plan comes down to numbers as much as anything else.
And just going back to if it's the idea stage you're at, has anybody heard of Lean Startup? No. So at Lean Startup, Eric Rees, so Eric and then R-I-E-S. If you YouTube him, he's got videos. The Lean Startup, I mean, it's a big book. And then there's the YouTube videos where he does like 1 hour webinars with like Google, a company, etc. But basically what he said is, you know, he learned Lean Startup the hard way and he come up with a Lean Startup because of the business sort of idea he had. It took months and months to get the idea to then say, right, will you test this? And he said no one would test it. And then he got someone to test it, but they said they won't click to the second page. So why they spent all that many months on creating this idea when no one got past the first page to see the second page? So the idea of Lean Startup is, for example, if you're going to put a vegan restaurant in an area where you think it's going to do very well, and you're going to spend thousands and thousands of pounds of kitting it up, getting the resources, the HR involved, everything. Well, the Lean Startup would be better putting a vegan van in the area you think it's going to do well, where you might just do one day where you've hired it for a couple £100 with your food supplies that you're going to supply, and just see what foot flow you get that day in that area. And then you've not spent thousands of pounds, and you know, get a good idea in that few days, week, one day, whatever it is, if it's a good, good idea. So yeah, Eric Rees, really good YouTube videos to watch.
Brilliant. Next question.
So my question is that you have this business setup idea, you've done your focus, and you've seen that maybe in the first 6 months, your business will not be able to, like, make any income just because it's a new business. So, and you approach the bank for a loan, or somebody like comes for a loan, and they give you the loan, and you set up the business already, started running, and they expect you to pay at the first month, second month. I'm not too sure the terms of payment as in that. Then apart from that, I just want to ask if a limited company also can go for something like a grant to start up, because of the period the business would take to mature, at least to start making something for itself. Thank you.
So the first part of that question, so we do payment holidays as well from the start, because we understand that you might not be making money from month one, and it takes time to do it, and so we do offer that as an option, 3 and 6 month payment holidays from the start, under startup loans and under RLS as well. Yes. We would expect some sort of a reason as well. I mean, we do it like kind of. It's not like you won't get it if you ask for it, but we do want a reason to write down and to understand like why won't it, because so yeah, but at the same time you do need to show some income coming in. That's for our loan serviceability reasons. Like if it goes more than 6 months, then we will be asking, you're more of a seed stage and probably not right for maybe debt funding, and maybe a grant would probably be a better option at that stage. And that's what I was saying in my first slide, that you can have a blend of all three, or you can have one of them, or it depends on where your business is at that point. But in traditional debt financing, you are taking on a debt, so you're expected to repay that debt. And as I mentioned, we do have some leeway in terms of payment holiday, and even our, we have quite a low default. Our first enterprise has quite a low default rate. It's around about, I think, 3%, which is probably lower than the industry average. And we are quite lenient with people who do default on us. I'm talking about the other end of it now. Who people do default. We do set up payment plans and stuff, and we try and work with that individual rather than attack them. But at the same time, it's business is a risk, and we are taking a risk by loaning the money, and we do expect it to be repaid. We will work within our means to help you, but but that's why, in terms of charities, we can lend to charities as long as they have slightly different point, but as long as they have a top line, a revenue line, we can do. But if there's too many gaps in that, then yeah, that will affect our serviceability or your serviceability. Going to what you were saying about, what were you saying? The kind of limited company access grants.
Not charity.
That's not my area of expertise. I will say we can match fund grants.
It's not my area of expertise either. I think going back to the lending point, these guys are what we call responsible finance providers in the broadest sense. These specifically, NatWest Less, they've got to do the right thing. And if their decision is that actually ultimately that proposition cannot repay the money, the worst thing they can do is lend the money. Okay, so that's the first thing. What does that mean in reality? If you're looking for lending, yes, there will be a repayment. Sometimes there can be a holiday. It won't be, ad nitum. It won't be forever, because again, they're lending on the basis that you've got a viable business proposition that will be able to generate revenue fairly short term. If you've got something that won't do that, then there are other types of funding that may be available to you. However, you need to see again that alignment thing. Is what I'm proposing going to be attractive to that investor, for example, i.e. they'll put their money in, not expect a return for 5 years. They do that on the basis that you're going to deliver high growth for them. So if you're a lifestyle business, that is not high growth, and therefore you're less likely to get an investor unless it's a business angel that likes you, likes your business, has interest in it, and is not looking for a return. Okay. Grant funding, yeah, if you're a limited company, you can get grant funding, but actually, this is the great grant debate, which I'll always have with you, isn't it? Grants aren't your answer. Sorry, I'm going to say this as somebody that's given grants. Grants are not the option, okay? If they're available and they're free money, of course you're going to take them. And you're eligible, of course you're going to take them. I would take them, it's stupid, but the grant will not make you a viable business. The grant will delay you being an unviable business. Okay, it will not make you a viable business. You've got to demonstrate you're a viable business. If you can demonstrate that in a relatively short period of time, you've got a viable business to generate revenue, then we're happy. You should be happy because that's what you want to do. But a grant will not solve your problem. It may give you some breathing space for a short period of time. And remember, grants are increasingly few and far between. And most grants now, and for a long time, have been for very small amounts. So actually thinking, I get a grant, I'm okay. I don't need to do anything. Actually, it drives the wrong mentality. This is my view, by the way. It drives the wrong mentality and just simply kicks the viability of the business down the track a little bit. So take it if it's there. Normally very small amounts, particularly if they're generic. If they're particular things like prototyping, really cutting edge R&D, you can get sizable grants, but increasingly most grants now, and historically, the large ones have been against capital assets. Because again, they've sort of got that asset. If they need to fall back on it, they very rarely take it. So big grants are only given for certain reasons. Small ones, is it really going to make you a viable business overnight? It'll just kick the bucket down the street. That's my personal view. I have delivered grants though.
But it's kind of business, like the healthcare business you want to do.
Sorry, the what?
The healthcare sector.
Healthcare, sorry.
Yeah, maybe you want to open a facility for maybe supported living, accommodation. You're going to get the accommodation, and you're going to get, you furnish the place and prepare the place for service user to come. But you're not going to get somebody into that accommodation maybe in 6 months because you have to go through the tenders and everything, approvals and all those things. So you are waiting to get that place done. So that's the kind of thing I'm trying to let you know, that kind of business model, not just like a business that you open today, you want to sell and you make profit, because it's going to take time. You start writing tenders, they consider it. If you win the tenders, you get some service users. It's going to take like 6 months or even up to 8 months sometimes.
Yeah, yeah, absolutely. And there are certain sectors, and I don't know what healthcare covers a myriad of different areas, as you well know. But again, if you look at healthcare from a life sciences perspective, then actually that's probably one of very few sectors that we as a funder treat completely differently. So with life sciences type businesses where they're developing products, having to develop them over a period of time, there is actually various programs that are available which reflect that lifetime of chance. If you're saying that actually I don't know if I've got a viable business because I'm waiting on tenders, that's business. because you'll be competing with somebody else that's also doing a tender and in a position to be able to go or have spare capacity or whatever. So that's a normal business process, no matter what sector you're in, and that's the risk, and the risk of being an entrepreneur ultimately. So it depends very much what the healthcare type is. Are you able to disclose that? Are you happy to disclose that? What type of
Is it
bit of
supported
healthcare
living?
is it? Okay. So again, there are certain even high street lenders that actually have specialist arms that focus on that type of sector. So actually it is a sector the high street lender in particular and other specialist lenders actually specialise in to reflect those particular circumstances. So my message to you is that actually there are specialists within every high street lender that specifically focus on that sector. So actually there's a solution already for you. Not necessarily NatWest, sorry Charlie, but there are other high street lenders that actually are most active in those sectors, and they have special products and models to support that, to reflect the fact that you need to fill that building with people, and that takes a period of time, and it's normally local authority contracts that you rely on. Yeah. So there are specialist funders, including some high streets, that provide products for that purpose. So it's there.
Good.
So it's there.
So when it comes to getting finance, and let's say in a company there's roughly around 3 people, do you look at the finances of each individual, or do you look at the finances of just one of the people?
So there's 3 people employees, not directors.
I guess they started the business together and they're growing the business.
So they're like directors of
Exactly.
they're together. No, we look at each individual director. So well, us personally, the banks might do it differently, but we ask for, in the first instance, a credit report of each individual director. The loan would essentially be split between each director proportionally or proportionate to the share of the company. Especially startup loans, if there is another director involved, if they can prove that we've contributed to this business in another way, like we purchased a machine a while ago, or I've offered my in marketing or something, they've contributed a significant amount, then we can maybe look at that, and in terms of not splitting the loan. But generally, as a rule of thumb, we'd split it according to the share. And yes, we would ask for the personal bank statements of each director that's involved.
Right, so does that mean one could potentially jeopardize getting financing if theirs isn't so strong?
Potentially, yeah. We do consider all situations, but yeah.
Yeah, I was going to say we're very much the same, but I know, for example, startup loans, I know a company with 4 directors who each took 25,000 each person. So I don't know much into the detail of that. I don't know if you two do, but that can happen as well. So you can do it on an individual basis, even though you're all doing it for the same company.
Yeah.
From a pure technical point of view, yeah, you're dead right. So because they'll be looking at the credit worthiness of each of the director stroke shareholders in the business, they're all relevant to some degree. Again, it's a matter of having, particularly if you've got a person in front of you and able to, having that conversation with people, because the point there is that in reality, when you're lending and investing in early stage businesses, you're actually only lending and investing to one thing, and that's you. Forget your market, forget your technology, forget your product, it's you. So actually, the most important thing is the individuals that are running the business at an early stage, their knowledge, experience, whether or not these guys get a feel for, these guys are going to stick it out, they're not going to run at the first opportunity.
Just add to that as well, we actually asked for a CV, which I know some people find quite bizarre for a lender to be asking for a CV, but it is for that reason. And it doesn't need to be an all singing and dancing CV with really long blurb of I'm a confident individual. You can miss out all of that. We for the CV, for our purposes, it just needs to be experience and qualifications, and the place and time you worked at a place and the job role. That's it. We don't need the description. And we asked for that as one, to check does this individual have the skills and knowledge and experience to run this business, and secondly, coming back to the backup plan, if the business was to not succeed, then what would they, could they go back into, for example, marketing with a circa 25k salary to help repay that loan as well? So that's the reason we asked for a CV as well.
Yeah, just following on to this question. So if it's based on the individual, so directors are personally liable for the loans then, or is it through the limited companies? I'm a bit confused with that.
So it depends on. So startup loans is a little bit different. So startup loans is technically classed as it is a personal loan, but for business purposes. So you'd normally, depending on what your accountant tells you to do, loan it back as a director's loan back to the business. But that is a personal loan, so it will go in your credit report, and that's how we lend it. Because normally you do need 2 years trading, to get from a bank, traditionally from a bank.
It's regulatory reasons.
Yeah.
So it means that we can dip under and provide that flexibility, as Cameron said. Otherwise, we'd just simply be another high street lender.
Cool. Yeah. But on the larger loans, the MEAF loans and the CF loans, which are backed by RLS or will be, those are to the business. And previously, we didn't ask for personal guarantees. We may be going back to asking for personal guarantees as well for that.
Cool.
So that would.
It's all about skin in the game. So taking personal guarantees, guys, is normal commercial approaches, and it's not about and through government schemes it will not be about taking your house away from you at all. It's about skin in the game. It's again coming back to the earlier point, the business will succeed or fail because of you, not because of us, because of you. Okay, so again, getting that skin in the game a little bit, and for you to, I know you would do anyway, but some people don't, is to actually focus on running your business is actually one of the ways to do that. It's also about mitigating some of the risks, obviously, from a lending perspective, but it also means that you are definitely tied into the business. You will be anyway, you'll be living it, you'll be passionate about it, but it actually ties you into the business a little bit more. Okay.
Just one other question which somebody posed recently. I'm not so sure whether your organisations do this, but short-term loans, like bridging loans. We've had one of our businesses ask us for that at the time, so we didn't know where to turn. So,
do you know, I'm increasingly getting asked about that, and I don't know if it's a reflection of where we are at the moment. If it's about supply chains, things taking longer, hopefully short-term increases in costs to cover gaps in cash flow, etc. I think it really comes down to what you're using it for genuinely. There is always, well, I say there's always been, there is quite a mature marketplace for what you've alluded to called bridging loans.
Yeah.
So the more traditional bridging approach, normally related to property, if I'm being honest, or assets of some sort. That's been around for some time, and actually outside of the high street, those finance providers seem to come and go, I think the phrase is, because it's not a particular model that you can necessarily make a lot of money from, or the risk, unless you've got the critical mass of the high street lenders. Short term's an interesting one. So let's separate bridging from short term. So you could potentially, for example, use some sort of revolving credit stroke working capital arrangements. Historically, that's been overdraft. But again, I would not recommend anything, but I would certainly not recommend using an overdraft for short-term purposes unless you are confident it is only for short-term purposes. So there are different things. We focus a lot on taking a loan out, but again, there are other finance options, one of which is that old-fashioned overdraft, which has been unfashionable for the last couple of years, but is actually coming back, and businesses for positive and less positive reasons are increasingly requesting overdraft facilities as that short-term approach. Yeah, and invoice financing.
I was just going to add to that. I've noticed there's been a slight uptick in demand for invoice financing and short-term financing. Yeah. I think it's to do with the economy as well.
Yeah. So just in case you weren't aware, which there's no reason why you should be either. So invoice financing is basically looking at what assets you have in your business and looking at the assets in terms of any invoices you've got left over. So it's your ledger book, what we call it. So it's your sales book. And if you're busy chasing that sales book for terms and conditions, or your cash is in that ledger book and trying to get that money back from your customers. So one way to do that and release the cash to address any short-term blips is to actually work with a provider that will provide you finance against your invoices. And that's technically called invoice financing, technically.
Okay. Brilliant. Any more questions at all? No. No. Thank you for that. As I know we slightly run over time, but I think we've made it back. But no, that was really good, because obviously it's unpacked a number of things. I think obviously we haven't covered all of the aspects of finance. Obviously we just basically focused on your organisations and loans, etc. But there is a wealth of other finance opportunities out there what businesses can tap into. And one thing I would say with the programme that we're tapped into at the moment in time, there is grants available, but it's grants for specific businesses who operate within the Bassetlaw area, Mansfield District Council area, and the Newark and Sherwood area. So on this programme, which is obviously a government-backed programme, there may be able to some support we may be able to give in that way. Okay, so no, thank you again for Lewis, British Business Bank, Cameron First Enterprise, Charlie, NatWest Bank. Thank you for that, and thank you for the audience, and thank you for everybody tuning in at home. And we'll hopefully see you on the 4th of August, where we're having Akshay's BBC Apprentice star coming to Nottingham. So we're bringing it back home.
Can you say who it is?
Do you know what? I'm terrible with names. It's Akshay.
Oh, is it? Okay,
yeah.
great.
So yeah, so he's coming along, and Chantel, another lady from Birmingham, has been focused in, featured in Forbes under 30s as well. So we're having there. So it's ups and downs about business, etc. So we'll be doing a bit of promotion on that, and again bringing people back to sunny Nottingham to have that event. So everybody's welcome to that also. Once again, well, thank you for coming, and have a great evening, everybody. Thank you.
Thank you.